Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, December the 9th. Year's 2021. Let's talk trading. Keeping it simple. Range Part 2. These videos are for educational purposes only. Your results may differ from mine. We spoke about range yesterday, and in fact, we usually speak about range almost every day. And why can't I seem to find the one chart I'm looking for? Here we go. We show the range here on the dashboard. And right now you can see the pound's at 46 pips. Pound is usually, the range of the pound is usually much greater than 46. So what does that mean? Well, it means chances are price is going to have to go higher and or go lower to get to that range. Now, of course, we could have a very tight day and maybe it stays at 46. Right now, you can see on the daily, it's an inside bar. So we use range to give us a clue if price wants to move and expand, or if it just wants to basically ping pong, go up and down within the current range. I know those aren't there's nothing earth-shaking about what I'm telling you. You probably know it, you probably heard it before, but the point is it's simple and you can make it work for you. Because it's so easy to get caught up in something like divergences of oscillators and price, or confluence, or a bunch of other things, multi-time frame analysis, blah blah blah, right? But you really don't need all that, in my opinion. Now, right now I've got this chart set to M15, and you can see if you scrunch it, where has price been ranging? Well, it seems like it's been ranging between the previous month's low, which is also the previous week's low here, and it's been ranging pretty much between yesterday's daily midpoint. You can see it. It's down, crossed. You can see it's just pretty much been ranging between here. Now we had a breakout to the low. Then it came back up with a vengeance, touched the mid, then came back down and touched the mid again. So when you're looking at your chart, you're seeing it's telling you that somebody's loading up here. You don't know if it's the buyers or the sellers. I would say odds are it's probably the sellers, considering when you look at the we can switch over to the daily. You can see what's been happening to the pound. It's just been pushing down here. So we know that we're in this range between here and here, which is the 6 plus 10 is 16 pips, maybe 17 pip range at the moment. You can do the math in your head. If we're 5.6 below this and 10.8 above this one, you can add those two, so it's like 16.4. But that's the range that we're stuck in. Now, you can see on the M15 greater than 10 pips 30% of the time over the past 100 bars. Over 20, only 1%. Only one time did that happen. So if we move up a time frame to M30, you can see here that over 14% of the time. And you can see on this particular bar, we turned right around, we touched that mid, broke it, and then fell back through. So if price wants to expand, it's going to have to the upside. It's going to have to break through that midpoint and actually close above it. And you can see here we had 1, 2 closes above it. And maybe the third time will be a charm here. And this is the second half of the hour. So if it's going to break, there's a good possibility it might break somewhere, say 10-2 or 5-2 the hour. Sometimes you see a lot of price action in those last 5 or 10 minutes of the hour. And in fact, let me place you, I'm going to pause the video for a while here. Okay, I paused the video just to see what price was going to do so we could talk about another part about range. When you see a wick, that in this case, price went up and then it came back down. So you can see here, up, down, and now up and down once again. On the other hand, down, up, down, up, down, up. And so that really shows you when you see price starting to have these long wicks that you're really in a range bound situation. Because what you want to see for it to is something more like this, where it goes down, comes back, and then breaks out. So we can see that price is ranging here. Now, what you can do, if you don't mind taking quick pips, is you see it get near the end, you play the reversal. So from here, from the 99.8, or just call it the between 3,200 and say 3,210, you could have played that back and forth over and over repeatedly because the price is ranging. And so right now we're looking at M30 and the range is 14.6. So how does that help us? Well, if you move up a time frame, you can see that the range is 14.6 on the hour. So what that's telling you is that price isn't breaking out, it's staying within that range. So you can see here, this is the second half hour, here's the first half. It's just staying within that area. So if you're looking at the M30 candle after the bottom of the hour, if you don't see that the second M30 candle is increasing that range, which it may be increased it by a point or two here and maybe a point there. You can see you're basically oscillating between the high and the low, and so then you can trade accordingly. You can trade the reversals. Now, sooner or later, it will break out. But if you were looking to the left here, you say, okay, I'll go short. Now it didn't break. You go, I'll try short again. I'll try short again. So that's 3 wins. And this time, if you went up here and you went short and it continued up, well, you've got 3 wins. If you're managing your money properly and your stop loss is set properly, you're still going to be ahead of the game. So right now we're back to the double O. Could take that long. And once again, if you did that, if you did it the first time, now you've got a chance to do it again. And you were up, what, 1 or 2 pips? Sometimes that's all you get. You don't get the whole ride. So in this case, you've got everything red against you from below the daily. So what you're thinking is that if I'm going long against the sea of red and the daily just turned red, it's probably smart just to grab a pip or two. But if you were going short and everything's in your favor, then maybe you can get a few more pips. But in this case, reading the chart, you can see right here, it's going to need to break that. Now, looking at what I like to call return bars, this bar right here, that's a return bar. So I would look for price to get back to the, call it 3190 level, the open of this particular bar here, 3190. So see how that plays out. And the other thing is, looking at this chart, we've got yesterday's close, yesterday's low, yesterday's open. So between the open and the close, that's the body. Between the close and the low, that's the wick. So we're in the lower wick zone right now. And we know price doesn't like to stay in the wick zone. So we're going to look for a break of the 94 level or a break to the upside at the double low. Once again, because we're looking at the daily range, and right now it's only 45.6 over the last, in this case, last 5 bars. 100 bars, we've got an average of 84.76, and the ATR is 84. So with the range at 45 and it's 84, it needs to move another 30 to 40 pips just to get to average. So chances of it being below 50 are pretty slim, because if it's greater than 50 93% of the time, then it's, less than 50 only 7% of the time. And so that's another way to use range to analyze what the price is doing overall, say on a daily time frame, or when you're dropping down looking, to do scalps. You can look at the lower time frames, and you can even go all the way down to M5. And once again, you can do the same type of trading we do off of the daily. You can do, you can see here's a lowest open over the last maybe 10 bars or so, and you can see right here, it pretty much did the same thing, hit this level and reversed. And remember, as long as you put your stop loss on, that's the worst thing that can happen to you, barring unforeseen circumstances like an outage or something. And as I mentioned just a few moments ago, price doesn't like staying in the wick zone, and it already busted out once there. So there was maybe a pip or so to pick up. And I know those of you with the smaller accounts, say $100, $1,000 accounts, you're going, well, I'm only making $1 or I'm only making $2. It adds up. It adds up over time. It's not what you do on any one particular trade. It's what you do on a group of trades, the aggregate. And if you have 100 trades and you've got 100 pips of profit, well, that means possibly you've doubled your account, or maybe you've made 10% on your account. So, it's easy to get caught up in what other people do and say and post on their forums and threads or whatever about hundreds of pips. But, there's another part to that equation. If they're only trading a dime a pip, well, that's $10, and that's okay. But, 1 pip at $50 a pip, That's real money. So, fellow traders, it's not what you trade, it's how you trade it. Go out there and drain the banks. This is the Rumpled One.